Yo, hello. I just got back to the thing. I don't know what happened, but yeah, here I am. I don't know what happened, but my computer just kind of like restarted, like out of nowhere. So, um, yeah. So during, the time I was off, we created a 15-minute fair value gap, and this is what we did during the Joe's job openings. We priced lower, and it appears that we are still continuing to hold this 15-minute fair value gap. So if we get a 15-minute closure below the 15-minute busy, then that would show disrespect. But as of right now, we haven't closed below it yet. So yeah, give me a second. Matt? Bạn có nói là 3 giờ ngày mai, 3 giờ thứ năm nó bút được không người bạn? 3 giờ ngày mai. Alright, so yeah, like I said, we expanded lower here, and depending on how this 15-minute candle closes, would tell me if we disrespect the 15 minutes busy or not. But yeah, we didn't take out London lows, and we didn't take out Asia's lows with that drop at 10 o'clock. So just something that you want to just pay attention to. There was SMT2, so if you guys want to mark that out, you guys can. There's SMTs between NQ and ES from that swing low to that swing low. Yeah. 15-minute fair value gap, we're trading within a daily fair value gap as well. So excuse me. But yeah, we're trading within that daily busy right now. And let's take a look at how this 4-hour candle right here, we can anticipate for that 4-hour candle's high to be taken. But like I said, I don't trade right at news, so we actually took out that 4-hour candle's low. But yeah, based on the 8-hour and the 4-hour, I can anticipate for higher prices. But we have to be in confluence with that. We have to have confluence on the lower time frames. That suggests is the idea of us trading lower or higher here on the 15-minute time frame. So for me to take a bullish setup, I would like to see a bullish model, a bullish 15-minute model, after trading into this 15-minute fair value gap. But like I said, I would like to see this 15-minute fair value gap hold as support. I don't want to see prices close below the consequent encroachment of that fair value gap. And yeah, there's that new day opening gap. I still would like to see prices actually retrace back inside this 4-hour fair value gap to rebalance it. So like on the 1-hour time frame, you guys can see, but this is my 4-hour, 6-hour, 8-hour, and 10-hour. Those are suggesting that we will most likely rebalance this their inefficiencies. So why are the 4 reasons prices move? To rebalance inefficiencies, to take out swing highs and swing lows, rebalance equilibrium, and create new structure. So in this case, we are actually taking out a swing high. Take a look at the Tuesday 18 p.m. so that's 6 p.m. Swing high, and we're also rebalancing that 4-hour fair value gap. So that's just something that you want to keep in mind. No trades as of yet. Yeah, but I told myself that I would go over the pros and cons and improvements from last week, So I'll go over with you guys, and yeah. Still about 7 minutes left to this 15-minute candle closure. 15-minute candle closure. So there's that 4-hour fair value gap. Keep in mind, ES I had already traded into it, but NQ hasn't. Still would like to wait and watch. Really no need to force anything here. Okay, so pros and cons. So we have, my mouse is so glitchy. I might need to get a new mouse or something, but yeah, pros and cons from previous week. So whenever there's a large expansion, right, in a day, and I am not a part of that big expansion, I always wait for a retracement of some sort. So during August 26, 2024 trading day, I waited patiently after we got a really big sell-off during the morning session. So I usually, like, whenever we create fair value gaps, what I mean by waiting for a retracement is whenever prices trades back inside that 15-minute fair value gap, I'll wait and see if there's some sort of reaction to that 15-minute fair value gap. So August 26th, that's what I did. Waited for the reaction and traded the internal model. Waited for the reaction off of the 15-minute SIBI. So 826, I'll show you guys. I'll show you guys what I mean by that. So on Monday, we sold off a lot during the morning session. We traded back inside this hourly fair value gap, and after trading back inside that hourly fair value gap, we started to get bearish 15-minute candles. So that's what I mean by getting a reaction. So we came into a hourly SIBI, a hourly fair value gap that should be respected as resistance, and we started to create bearish power of 3 candles. And yeah, that's just one of the pros from previous week. Another pro is I was able to long even when we are in overall bearish order flow, because I understand narrative. I understand that prices is just only trading up higher to continue lower. Now listen to that again. I only traded that long setup to continue lower. And some of the cons from last week is so whenever I took my entry, I believe it was on, was it Monday or Wednesday? I believe it was on Wednesday, when I took a short model, and it ended up playing out, but I failed to recognize the higher time frame narrative. Higher time frame was also suggesting lower prices. So I closed my trades according to the internal model, but I should have left some runners for the external model. And yeah, second con is I need to pay more attention to the entry fair value gap to see if we got a disrespect of the, you know, consequent encroachment, or did we close below my, if we're longing and prices closes below my entry fair value gap, then I need to close some positions off. And yeah, what I can improve on is if the external model, or if the internal model, sorry, if is in alignment with the higher time frame model is in alignment with the external model, then I can trade expansion models, which means that I should leave runners for the external model. And yeah, I can continue to be more patient. And like I said yesterday, I wasn't able to you know, be a part of this massive move down during in the morning, but I waited till we got a retracement, and then we began to sell it off, and then that's when I took my entries to sell short. But yeah, some of the improvements here is I would trade normal size here. I'm not going to reduce the size after winning a trade or losing a trade. If the lower time frame model is in alignment with the higher time frame order flow, like I said, I need to have conviction to hold the trade for a longer period of time. This will allow my winners to be significant. So allow my runners to run. Being more selective with my trades, I should ask questions like, why did we create that power of 3? If I can't answer that question, then should I take it? Something that, you know, I should be considering. Should that 15-minute fair value gap be treated as a breakaway gap? I'll get into that more later, but yeah. Pay more attention to SMT. I have the SMT charts put up here, and yeah, paying very close attention to that. So look at the target highs and lows. Ask yourself, is there SMT between the markets? And continuation of the improvements here is, don't be afraid to take a loss. Your performance is not reflected by the outcome. It is determined by the quality of your model. So if your model is an A+ setup, but that model ends up, you know, it just ended up being a losing setup, then what's the point of, you know, bashing yourself? That's a model that you'll take every single time. So there's no point in really being so critical and being so negative. If your model is an A+ setup and you didn't execute on that, that's when I would give you a C- performance. But if you took your model when it's an A+ setup and you're able to execute on that, then it's an A+ performance. And pay attention to other time frames. So like I said, going back to the lower time frame model is in alignment with the higher time frame order flow. Ask yourself, what is the other time frames doing or suggesting? Is there a alignment between multiple time frames? Yada yada yada. But yeah, going back to the live charts, we completed the 4-hour and 8-hour objective. We took out that 4-hour high. However, I still would like to see prices retrace back inside this 4-hour fair value gap to rebalance it. On the hourly time frame, it is still open. We haven't even rebalanced it yet, so that could be a target if we are going to long. But I wouldn't hold shorts for too long here because, like I said, we're still in, you know, a bearish order flow here, at least on the 4-hour, in the 6-hour, and the 8-hour. And yeah, anything else I do want to say here? Not really. What is the low? 933.93 and a quarter. 933 and a quarter here too. All right. So those are some of the pros and cons and some of the improvements here I can do for next week. I will go over 2 A+ setups here with you guys. Let's go with this one. Okay, so this one was actually July's 24th, 2024 trading day. So coming into the PM session, I noticed how we retraced back into a hourly fair value gap. So we just looking at based off this charts here, this looked like we expanded a ton during the morning session. So we started to get a retracement during the lunch session, and then we got a continuation during the New York PM session. So this is a kind of like what I was talking to you about, how I was patient and just waited for the retracement. So I waited until prices retraced back inside this hourly fair value gap, right? After retracing back inside this hourly fair value gap, what do? Well, we created a 15-minute CIVI. We created a 15-minute fair value gap that is bearish. So I don't take my entries at exactly when prices retraces back inside this hourly fair value gap. However, I just want to see if there's a reaction to it. So we got a reaction by, there's these bearish candles here, and we created a 15-minute CIVI. So when prices trades back inside this 15-minute fair value gap, we have another reaction. Like I said, I don't trade whenever prices trades back into the 15-minute fair value gap. I don't take my entry there. I just want to see if there's a reaction. So whenever we had a reaction and we created a bearish 15-minute candle, I went onto the lower time frames now to take a entry. So based on this 15-minute power of 3, whenever I say power of 3, it just means the 15-minute candle. Bye, man. So based on this 15-minute candle here, this bearish candle, I can anticipate the next 15-minute candle to take out that 15-minute low. And this 15-minute low is actually in confluence with the 30-minute low. So that 30-minute and the 15-minute are suggesting lower prices. So we have time frame alignment. I can answer the question, why do we create that bearish power of 3? So those are multiple confluences. And what is the higher time frame suggesting? Well, the higher time frame, we're actually really close to attacking, or really close to 611's low. 611 is June 11th low and June 10th low. So that's now lower time frame model is in yeah, bye, man. So lower time frame model is in confluence with the higher time frame order flow. So now I would go onto the lower time frames to target, or I would go onto the lower time frames to find a PD array to enter the trade model. And my trade model, like I said, is to target the 15-minute and the 30-minute low, and then we can leave runners to attack June 11th and June 10th low. So on the 3-minute time frame, we have created this 3-minute fair value gap, and this 3-minute fair value gap never got disrespected. So I take my entry whenever prices trades back inside this 3-minute fair value gap to target the 15-minute and 30-minute low. On the 1-minute time frame, you can see it a little bit clearer here, but at 2:30, we open up, we retrace back inside the 3-minute fair value gap, and then we take out the 15-minute and 30-minute low. That's my entry. That's in and out, really close, and I just let my runners run, and yeah, A+ setup. These are the setups that I do want to take. Like today, will we see a setup like that? I mean, we can, but is it high probability? No. Why? Because we just expanded so much. We expanded here. We expanded 800, or actually, we expanded 730 points yesterday. Are we going to expect or anticipate another expansion move like that? No. I'm not anticipating another move like that again today. I'm anticipating either, consolidation or maybe a continuation, but not to this scale. But yeah, like I said, these models here, every time I review them, it's kind of like hope that there will be models every single week, every single month. Maybe not this specific day, but the next day. If you're willing to wait and be patient, then the markets will eventually give you that setup that you're looking for. All you have to do is just be patient and be ready to execute on the model. Like today, let's just say I were to take all these other random setups, right? Well, I have the conviction to be able to take my trades the next upcoming day. Whenever, let's say I take 5 trades today, I lose all 5 of them, and they were all like, you know, all the setups weren't that great. I wasn't able to answer the question, why do we create that power of 3? And I lost all 5 of them. What do you think that's gonna do to your confidence? That's gonna, your confidence in your model and in your strategy is going to drop, because you've taken all of these unnecessary models that isn't an A+ setup. So whenever, like I said, whenever you just wait for the conditions to be right, it will pay you. That there will be days where it's just super clear and clean, and you just have to be patient and willing to kind of ride that storm out. The quote from yesterday, my daily quote from yesterday, since it was raining where I'm at, I decided to go with something to do with waiting out the storm. So if you wait out the storm, the good days will follow. So here is the daily quote. Life's not about waiting for the storm to pass. It's about learning to dance in the rain. So, okay, boy, that just went against the my entire, basically everything I just said there. But I guess this is what I'm interpreting here. The way I'm interpreting this is, you have to enjoy the process, right? But like I said, enjoy the process. However, trading specifically, are you going to be wanting to take all of these unnecessarily low condition trades, even though, like, you know, today is going to be low probabilities? Because what did we do yesterday? Like I said again, we expanded 730 points yesterday. You don't anticipate another expansion move like that today. So yeah, be patient and the good days will come. But that's going to should I do another? Okay, I'll do one more little A+ setup recap here. So this trade, okay, simply just looking at it right now, there's time frame alignment here. So first thing I notice is there's time frame alignment. This is my hourly chart, this is my 30-minute chart, and this is my 15-minute chart. So the 15-minute, the 30-minute, and the hourly are all suggesting higher prices. On the 15-minute time frame, if you zoom in, we have created this 15-minute fair value gap. This 15-minute fair value gap here is going to be treated as a breakaway gap. Why? Because I am anticipating for prices to take out the 15-minute high first. I want to see prices take out the 15-minute high, and then after we take out the 15-minute high, if we retrace, then we retrace back inside this 15-minute fair value gap. But I'm entering this trade model on the basis that this 15-minute fair value gap shouldn't be traded back into. So breakaway gap theory, time frame alignment, and rebalancing this hourly fair value gap here. So on this hourly time frame, we created a hourly CIBI, and even though just looking based off of this here, it looks like we're overall bearish here. However, we can trade internal models. So this is suggesting that we are going to rebalance this hourly fair value gap. So now on the lower time frames, I'm going to try to find a entry model or an entry pattern to target that 15-minute high and 30-minute high and hourly high, and also to rebalance that hourly fair value gap. So there's a 5-minute fair value gap. I take my entry at the 5-minute fair value gap, right? And like I said, I'm treating that 15-minute fair value gap as a breakaway gap. So I don't want to see prices retrace back into or price lower into that 15-minute fair value gap, because I'm treating it as a breakaway gap. So on the 1-minute time frame, we open up at 3 o'clock. I don't take my initial entries here right at 257, 258, or 259. I wait for a specific time. So I wait for 3 p.m., right? at 3 p.m. we traded lower into the 5-minute fair value gap. I take my entry, and then prices takes out the 15-minute, 30-minute, and hourly high. This is an A+ setup. Why? Time frame alignment. We have the fair value gap, breakaway gap theory. We have a hourly objective of rebalancing that hourly SIBI, so we know why we should be trading higher. Is there a lower time frame fair value gap? There is a lower time frame fair value gap, the 5-minute time frame, and yeah, I'm buying below the 3 o'clock open, and everything just pans out for this trade. Very, very good trade here. A+ setup, and like I said, all of these, you know, just break down to my trades, review my trades. Like I said, it's a constant reminder that these setups will pan out. And yeah, let's go back to the live charts here. So I do want to go over here on the 50-minute time frame. So this 50-minute candle here, it is suggesting bullish price action, just simply based on the 50-minute candle. Why did we create this 50-minute bear or bullish candle if we were to close right now? Why did we create this candle? Well, we traded into a 15-minute fair value gap that we are still continuing to respect. And look at the level that we respected. We respected the consequent encroachment of this 15-minute fair value gap. So I can now, you know, try to find a trade model, and it's, keep in mind that it's also in alignment with the 30-minute time frame. So the 30-minute and the 15-minute are in alignment with one another. So now you would want to go onto the lower time frames here to find a fair value gap to enter off of. So the 5-minute, there isn't. The 4-minute, there isn't. 3-minute, there isn't. 2-minute, there is not a fair value gap. 2-minute, 1-minute, no fair value gaps. However, there is this time right here, 10 at 10. So we could actually retrace back inside this time window, and, or actually, never mind, we already completed the objective for the 50-minute model at least. So we completed the 50-minute model, and yeah, that's actually, I wouldn't want to take this because we already completed the model. There wasn't an entry pattern here. Yeah, I wouldn't have taken that trade actually, because there's no entry pattern. So even though we know where we're going here, so based on that 50-minute and based on of that 30-minute, we have time frame alignment. Both time frames here are suggesting the idea that we can continue higher. How high can we go? Well, we can target the 4-hour fair value gaps low. So the 15-minute and 30-minute are telling us we are continuing to go higher now. So time, and I believe this is what I mean by, or this is, I feel like this is what ICT means by time frame is, or time is the most important aspect, and I do believe that it is. Like simply based on time here and how we closed here on the 15-minute and the 30-minute, it was suggesting now we will continue lower. And yeah, there was a lot of confluences here. It's just there was no entry pattern. The 15-minute, like I said, 15-minute, 30-minute suggested higher prices. Why did we create this 15-minute power of 3? We traded back into a 15-minute bullish fair value gap, and we created a bullish 15-minute candle closure. And yeah, that's probably gonna be, I don't know if there's anything else I do want to look for today, but I'll stay on it with you guys for just a little bit longer. We are rebalancing this 4-hour fair value gap. So if we are going to continue this, you know, expansion lower here, right, we have to show some sort of bearish pressure or bearish like reaction to this 4-hour fair value gap. So I want to see us create, I want to start seeing bearish candles on the 50-minute time frame to confirm the idea that we are going to continue lower. but it just depends on what prices really wants to do. I just kind of wait and see what prices will do, and then I will act on that. And I really hope that this is give you guys a lot of insight. I don't know if there's anybody watching today, but yeah, let's see if there's anything on here. Oh, this got long right at 9:30. So let's see if there's any people if there's anybody on the live stream today. Yeah, let's just see. I don't have the chat opened up. I feel like I should, but and let's see if there's anybody watching. Hey, I made a live stream this icon. Oh, nice. I don't know if you're still on here, Chaos, but I appreciate you for watching, man, or joining. Hopefully you found that insightful, what I just kind of just gave you guys a massive rant. But yeah, I appreciate you for joining. I didn't have the live chat on, so I couldn't really interact with you guys. But I appreciate you for joining, though, for real, for real. Should I just here? I'll actually just get the chat on to my OBS setup here. Okay, so I should now be able. Okay, nice. I should be able to see your comments now. I like your emoji there, Zyken. It's is it like a samurai? But yeah, that's pretty good way. Like, I feel like I read the markets pretty well here. Like I said, I am still anticipating for prices to create this daily fair value gap. I don't see us move. I can't see us move. I can't see us moving. I can't see us moving 546 points today. I don't know if that's like, I mean, anything's possible, but is that efficient? I wouldn't say so. Like I said, I am anticipating this daily fair value gap, or for us to create a daily SIBI. So this daily SIBI is probably going to be traded back into if we get a bullish candle closure on today's price action. But yeah, let's just continue to watch prices. It's only been the very first hour. I think we just completely rebalanced the RTH gap. We did. So we gapped down from yesterday and we filled in the gap. So now let's see how we treat. So if I do want to take any shorts, I would short if we can get a closure below this 15-minute fair value gap, and then target London lows and Asia's lows. And yeah, I do want to see us respect this 4-hour fair value gap. But if we don't, then we'll just continue to watch prices on the sidelines. But just keep in mind, we are rebalancing a 4 hour, 6 hour, 8 hour, and 10 hour fair value gap right now. So like I said, those fair value gaps should be treated as resistance levels. I think I'm gonna have to start doing this more often. Just staying off my phone because I feel really in tune with the markets right now. I am in tune. Then made the ranges equilibrium. We had a 5-minute fair value gap. I put my limit order on the bottom of it, anticipating for it to hit the trend line. Put my stop loss at the bottom of the first wick to the fair value gap, which was just the low made for highs. So this is the 1-minute time frame. What is the 5-minute fair value gap though? We had a 5-minute fair value gap. This one? But that's at 9:45. You took your entry at 9:30. Dum 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 dum. We haven't gotten a bearish reaction to this 4-hour fair value gap, but the thing with longing here is it is now low probabilities. If we were to long, let's just say that I was giving a opportunity to long in this situation here, in this 15-minute model, would this long be high probability? I mean, with the considering the conditions that we're in right now, it's not the highest of probabilities because you want to be longing whenever the markets are bullish. But whenever we're in consolidation or whenever we're like higher time frame wise, we're bearish, right? Like I said, these 4-hour civvies here. The reason why this specific long here would have been a good long is because we haven't traded into a bearish PD array yet. We are still, the objective here is still to rebalance this 4-hour fair value gap. So there isn't a reason that we should be continuing lower just yet. Once we trade into this 4-hour fair value gap, that's when taking any longs is going to be lower probability. So you don't want to long whenever we're in a bearish higher time frame PD array, and you don't want to short whenever we're in a bullish higher time frame PD array. So let's actually, I'm gonna put that down in my trading, one of my trade concepts. I don't know if I have the video uploaded yet, but I pretty sure I have already created the video. I'm just waiting for the day to release it. But avoiding low probability conditions. New point. You don't want to long. You don't trading a bullish model when we are in a bearish higher time frame PD array. That is a low probability trade. Vice versa. So trading like here, if we were to take a long setup here, when we're trading into a 4 hour, when we're within a 4 hour bearish fair value gap, we haven't had a 4 hour disrespect of this 4 hour fair value gap yet. We haven't disrespected it yet, so that means we shouldn't be, holding out. We shouldn't be holding any longs when we're within this 4 hour fair value gap, if that makes sense. But yeah, just something that I do want to just point out. So like, we're about to close on this 15-minute candle, right, in about a minute and 30 seconds. So just simply, all you have to do is just look at how this 15-minute candle is created, right? What can we anticipate for this very next 15-minute candle to do? I can anticipate at least for the very next candle to take out that 15-minute high. So I want to, that's what I would anticipate, right? But even with that thought process in mind, the reason why I wouldn't take this model is because we're trading within a 4 hour bearish PD array. So longing inside a bearish higher time frame PD array already kind of like cancels out the trade idea itself. There's no time frame alignment. The 15-minute isn't aligned with the 30-minute yet. This 30-minute candle closes in another 50 minutes. So there's no reason to take this trade. There's no time frame alignment. But that's just the thought process that I want you guys to start adapting. Is ask yourself, what is this very next candle going to do? Like, I ask myself this question all the time. This daily candle. Notice how we closed bearish on this daily candle, right? What can you at least anticipate for that next daily candle to do? Take out this daily candle's low. It's a bearish daily candle. So the very next daily candle, I'm anticipating for prices to open up, retrace a little bit, and then take out that daily low. After we take out that daily low, then I really don't care if we get, an expansion like that. All I'm trading is that first initial move lower. This move right here. And if we trade higher, then we trade higher. But I don't really care. All I'm targeting is that daily objective, that daily low. And we already took out that daily low, and we didn't have a setup to target it. So things happen. But there was a really nice setup. I believe it was this day actually. So like, if you look at it from this daily candle, right? I know it's a little bit messy, but try to bear with me here. On this daily candle, we can anticipate for this daily candle's low to be taken. So this daily candle's low should be the draw of liquidity coming into the next daily next day. So prices trades back inside this 4 hour fair value gap and takes out that daily low. That's a swing trade. Yeah. I know I don't have much patience when it comes to retracements, etc. So I just aim for fast TP. My aiming for more than a 1.5. That was a nice. So let's see. So like I said, we take out that previous 15-minute high, and now we're starting to get. Let's see what we do. It's only been 2 minutes. It's passed. How long have we been streaming? 45 minutes in total. I streamed about 20 minutes before this. I'm actually what I'm gonna do here is actually I'm gonna turn off the stream. I'm gonna thank you guys so much for joining. I'm actually going to go eat, and I really need to. I need to go shit. So I will catch you guys later. Tomorrow's the Thursday. I won't be streaming tomorrow, but for sure I will most definitely be streaming on Friday.